Group 5 has reported a good set of numbers for the full year to the end of June. Profits were up 88% to 333 cents a share. Dividends have been grown by a similar amount for the full year, 67 cents, but a big jump in the final dividend from 14 cents last year to 35 cents this time. With us in studio is Mike Upton, Chief Executive of Group 5. Mike, good to have you in studio. At last,
Thank you, Alec.
We can talk to you about the Competition Commission and your move into it, but we'll do that a little later. Let's talk about these numbers first. A big improvement, but I guess you've had your challenges.
It's been a big improvement, but I think we should recognise also it's off a lower base. You know, we had a big sort of clean up in 2012 in the infamous construction materials business, and also in the Middle East when we took some hard decisions on what that might look like, and those have panned out to be more or less aligned with what's been the trading result since. So off a lower base, but I think also the aspects of the strategy beginning to show through in terms of power and oil and gas and the sort of moving into Africa and so on. So I think we're satisfied. There's a lot to be done still. The markets are quite fragile still, so these results are there's some fragility in the market, I think, in terms of what the future holds. But from a South African perspective, weak markets, but our fortunes, I think, in the next sort of 12, 18 months would be more outside the country and in those new sectors that we've well positioned for, I think.
Mike, it's Lindsay in Cape Town. Well done on those numbers. I reiterate what Alex said, but as you quite rightly point out, you've got to be conservative because this is off a low base. The market was expecting it. Your operating margins are group-wise up to 5%, which is also good. You use words like conservative and looking at the quality of the order book, which is probably a different approach to, say, pre-2010. On the one hand, yeah, you might be a little bit hamstrung by that sort of approach, but on the other hand, it might save you a bit of money in the longer term because there have been instances of, I don't know whether it's your company, but certainly across the sector, people going into contracts that actually ended up them losing money. So this conservative approach in the long run actually might be beneficial.
Thank you, Lindsay. Yes, we were not very popular when we said we were going to look at the balance sheet and the margins at the expense of revenue. And I do think that what's come out in the last 12 months or so has been, that I think we made the right calls. We haven't seen huge growth in the top line, but we have got a very good balance sheet. We've preserved margins relatively in a weak market. And we've spent money wisely in terms of new positioning for the future. So I think we're satisfied that we did make the right decisions, although it was sort of criticised some time ago.
Conservatism is also shown in your dividends, 4 times covered dividend, even though it's up quite a lot in last year. Is that a policy that you're going to maintain into the future? Is that something that you just have to have in construction?
One needs cash in construction, but equally, of course, I think 4 times cover has been our standard for a number of years now, and we do review that every year with the board, and they were quite happy to go with a 4 times sort of cover on the baseline earnings, whereas in the past we've also taken only cash earnings into account. So I think we were fairly generous this year.
I was just a bit wondering about whether the market expected more. I know you have. It's well known that that's the kind of high dividend cover you like, because your share price started off level pegging and it's dropped. It's down by 3.5% at the moment. In a rising market, that tells us that somebody doesn't like the numbers.
I think it's on low volumes, but ours is not to manage the share price, it's to manage the company.
Alec, Mike, I was just looking at something here in some of your highlights and in this case lowlights, and I was listening to a conversation this morning on the construction sector on Open Exchange on CNBC Africa, and they were talking about the way that companies like yours will do business in the future, and there will be South African companies with great South African skills and great South African experience but doing more and more business overseas because of the reasons that we've done to death on this particular program. But it's not always a greener across the fence overseas, is it? Because it says here losses of 51 million in line with forecasts from the Middle East, deflated and otherwise robust civil engineering segmental performance. So just because you go overseas doesn't always guarantee success.
Absolutely right. So one has to have very robust systems in terms of understanding your markets, understanding your clients, your counterparty risk, your regional risk. I mean, the Middle East was good for us on paper for a number of years, but the end game hasn't been so pretty. So, certainly some lessons learned there. But from an African perspective, which is our major focus going forward, we've done quite well there, and we haven't had bad contracts in Africa for a number of years now, because I think we've been quite robust in what we will and won't do there.
You've learned the lessons. You've learned the lessons on your materials business as well. What was the total losses?
Gee, it's a big number, Alec, yeah. I mean, we had a billion rand business there, and it ended up as a few hundred million. So a substantial loss of value, for shareholders.
A few hundred million from a billion. So
it's a big number. Yeah.
800 million rand. Wow.
Yeah.
Let's talk about the issue of the moment. You guys decided to go to the Competition Commission first. You've been quiet up to this point. I think you did say to us, you'll talk to us, but wait for results. Well, it's results day. What sparked it? And perhaps you can just take us through your feeling. Was it a good thing to have gone in the first place, looking back?
Well, I think, there was a sort of a change in leadership around that period of time, sort of 2006 and 2007, and in 2008 the Commission launched its investigation, or announced its investigation into the industry, as it had been doing through the supply chain of the sector, into the steel and the rebar and the precast industries. So they eventually got to the pure contracting businesses. On our watch, we certainly wanted to have a robust governance environment in Group 5, and supported by the board, we went into a compliance process to make sure we understood our compliance regime in the organisation. So those early discussions with groups of employees did reveal some questions that were concerning to us. So we took that to the board, and they were very supportive of us going big, actually, in terms of a deep dive into our organisation. So that was long before fast tracks and all the rest of it. So we did what we think is the right thing, and I still think we did do the right thing. We exposed quite a lot of activities in the industry and in our own organisation going back many years, actually. And one doesn't want to judge, but that was the culture of the industry. We didn't, we wanted to have a different culture, absolutely, going forward in terms of the management team of the day. So we did a deep dive. We investigated intensively. We put lots of people under oath, and we extracted a lot of information that wasn't pretty, actually. And so we used that to make our submissions to the Commission back 2009. Largely, I think quite a lot of what we gave them was information very valuable in designing their process, we'd like to think. And so their process rolled out over the next, from 2010 and 11, in terms of the fast track process. And obviously, the fact that we gave lots of submissions, and they investigated only 25 of our submissions, because there was time prescription and all sorts of issues there. So, we achieved a leniency on all of the matters which we submitted and which they investigated. But obviously, clearly, there was never going to be a guarantee, because we may not have found everything. The industry, quite a lot of people move around the industry. People have retired, have left, emigrated. So at the end of the day, we did get to a place right at the end when there was a number of matters which the Commission, where we'd been called out and where we had no evidence of our own. And we then went into a process with the Commission to see what is the basis on which we should or shouldn't pay a fine, given that we obviously insisted on an element there of evidence. And we're in that process.
Mike,
right,
can I just quickly butt in, because we're running out of time
Yes.
here. You were very brave in doing so. Have you been ostracised by the rest of the industry? Because what you've done is not only expose bad practices, and that's a kind way of putting it, but also has fundamentally changed the way that contracts are competed for and tenders are competed for, etc. So you've probably upset quite a few people.
I have no doubt that I have not been the most popular person in the industry, but I think I've also, in private sort of conversations, a number of our peers have said they wish they had the same support from their boards as we had from ours. So I do think, though, that the industry's got to a place that we needed to get to, so that we can move forward in terms of our interaction with government and our client base.
Just to close off with, what did it save you by going there first? If someone else had gone before you and you'd had to pay
well,
those
I mean,
fines.
you've seen the size of fines which are coming through. So if you want to measure it in purely monetary terms, it'll be some hundreds of millions of rand. But I think also, more importantly, is that we cleansed our organisation from within early, and that gave great comfort to our employees.